Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Welcome to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Kevin Bupp. He is the founder and CEO of Sunrise Capital Investors, which invests in mobile home parks, parking lots, apartments, offices, single-family homes all across the U.S. Welcome to the Money Answer Show, Kevin.
Jordan, thanks for having me.
Just give us a little bit of background of how you got to be where you are today in the real estate market.
Yeah, sure thing. And again, thanks for having me here. Excited to be here with everybody. So I've been investing in real estate pretty much my entire adult life. I started buying single-family properties like a lot of folks do back in my early 20s, and evolved over time into larger types of properties, larger deals, what have you, apartment complexes, commercial real estate. And about 8 years ago, was introduced to the world of mobile home parks, which is one of our core competencies today. It's been our bread and butter asset class that we've spent the most emphasis on here over the past 8 years, going on a decade now. And in addition to that, one of the other asset classes that we've recently introduced to our investment portfolio are parking assets. So parking lots and parking garages in heavily trafficked urban locations and tourist-driven locations. So,
very good. Well, let's kind of start with an overall view of the real estate market. It's really changed dramatically because of the whole COVID-19 situation. Why don't you kind of sum up the major changes that you've seen and what's getting hit by it and what's getting improved by the whole COVID situation?
Yeah, that's a great question. I think, and you almost have to break it down segment by segment because there's certain aspects of the real estate market that have done great, have survived quite well here over the last 5 or 6 months since the pandemic have hit. For example, being in the mobile home park space, we're in the affordable housing sector, and not just the affordable housing sector, but residential real estate in general, rental residential real estate in general has done quite well. It's fared quite well, and there were many sleepless nights in March when the only thing that we could think about as a company is, come April, who is going to pay and who's not going to pay the rent. And I think that was the fear that was pretty much across the board for anyone that owned residential real estate. And obviously the stimulus came in and a lot of folks started receiving checks and then additional unemployment benefits, what have you. And so, that part of the real estate sector has been somewhat propped up. Folks that still have jobs still pay their rent. Those that don't have jobs, a majority of them have been receiving income, sometimes even more income than what they were when they were working. And so we have not seen much of a downtick at all as far as our collections are concerned. We have, select properties here in certain states that are a little bit more impacted than others. But generally speaking, across the board, residential rentals have fared quite well. And then you start looking at sectors such as the hospitality industry. The hospitality industry is the one that is getting crushed by far the most out of any of the other commercial asset classes. Folks aren't traveling. Businessmen aren't traveling. Folks aren't traveling for vacation. They're doing staycations, going locally where they could drive. And the hospitality industry it's taken a bloodbath right now. And I'm not sure how long it could really survive dealing with what we're dealing with today. In fact, I've already seen a major uptick over the past month to 6 weeks in auctions. Hotels going up for auction through some of the major platforms such as 10X, what have you. And I think that's only going to snowball from here moving forward. In fact, there's I forget the number, but it's nearly $100 billion of CMBS defaulted debt, which a lot of that is tied to both hospitality and retail. So retail is also, taking some pain during these times, and office I think is it's going to have a more of a delayed reaction. As we know, lots of folks are working from home. Companies have realized that they have been able to maintain the similar efficiency, sometimes even more efficiency with folks working from home, and they will ultimately come to the realization, a lot of them, that they might not need the same amount of office space, square footage as they might have in the past. And when the lease comes time for renewal, will they renew it or will they not? And I think that we'll see a delayed factor there in the office space here in the future. So But just
And then
generally
how about
looking
a
at-
single-family residential? What's happened there?
Yeah, single-family residential seems to be doing quite well. Again, it's really falling into the same category as residential rental real estate, whether it be mobile home parks or single-family homes or apartment complexes. It's faring very well. It's incredibly strong. In fact, the inventory is at an all-time low right now, especially in markets outside of the urban centers. You know, the major urban centers are being impacted greatly. You know, New York City, Chicago, Boston. There is a higher than average vacancy as far as available units, and that is very different in majority of the remainder of the country. Down
Is
here
this
in
a
Florida, where we're
temporary
based out of,
situation, or do you think, Kevin, this is a long-term? I mean, say we got a vaccine and say the COVID goes away. Is this trend of people emptying out of the cities, going to the suburbs and rural areas a temporary or a long-term structural situation?
You know, that's a great question. I mean, I don't have the crystal ball, but I will say that us as humans have very short memories, and I think there will be a comfort level that's given once a vaccine comes out. I mean, there will be surely a large majority of the population that will take the vaccine, and that will give them the comfort that they need to, move back into some type of normalcy. And then there's the other side of the camp that will not take the vaccine, that are probably already ready to get back into that normalcy, like what things were prior to COVID. And so, and then there would be a small camp. I'm thinking that just they won't be comfortable no matter what happens, right? They'll still live in fear. But ultimately, I think we have a very short memory, and I would struggle to find a world where, New York City and Chicago and other major cities across the world, just become desolate wastelands. I struggle to see that, Jordan. But again, I don't have a crystal ball. But my guess is that
does that mean you see opportunities,
years,
kind of distressed opportunities to buy into the places that are getting hurt right now? Retail, hotels, Center City.
I do, and that's not one of our. Hospitality is not a sector of ours, and nor is retail. But I think that there will be a lot of opportunity for the properties that are in prime locations, right? I mean, when you start talking about retail, and we have to break it down segment by segment. Retail is already in trouble. Generally speaking, retail is already in trouble with the e-commerce, the looming threat of e-commerce, and it was slowly just dying a slow death. And I think COVID ultimately will put the nail in the coffin of those less desirable retail locations. And so I think situations like that, those types of distressed situations of less than the desirable locations, will have to get repurposed into something else. I don't know what that is. It's going to be case by case. But I think that there will be opportunity in prime location, Main on Main, right? The corner of Main on Main. That type of location will thrive no matter what happens. And so if it goes through a short-term period of pain due to the pandemic, I think opportunities will come about in retail because of that, in office because of that. I think that also what you'll find in urban type settings, large office buildings will ultimately get converted to other types of uses. Housing being one of them, right? There's a massive shortage of housing across the country. So I think we'll see a lot of conversions that come about out of office buildings. And I think the same thing will happen with hotels as well. Prime located hotels either will maintain the hotel status and this will be picked up at, below replacement values, and that new buyer will wait until things come back, or a new buyer will come in and identify that there's an opportunity to convert it to rental housing and, just completely shift it to another use. So,
and conversely, so we talked about the opportunities in distress, but conversely, do you think it's too hot to invest in the areas that are booming, like the suburbs and rural areas where people are moving to? Is it overpriced at this point?
Yeah, everyone's got a different target of what type of returns they need to receive on their money. I think there's never a right time and a wrong time to buy. I don't feel. I feel so long as you're in tune with exactly what type of investment returns you need to receive on your capital that you're placing into the market, and you can get comfortable with what you're going to receive in any given market, then it's the right time to invest. If you're saying, hey, I need to receive no less than a 10% return on my money, but yet you're willing to settle in the heat of the moment, and buy a property and only receive 6%, then I might say that you're overpaying, and now might not be the time to invest. You should just kind of wait and sit by the sidelines and see if things cool down a little bit, because it is crazy. The suburbs are absolutely insane right now. Anywhere I go, I just traveled to North Carolina this weekend, and even up in the mountains, the mountain towns, you look at Realtor.com, and I guarantee 80% of the listings have pending on them. Everything is under contract, and everything is going for 10, 20, 30% higher than asking price. The bidding wars are happening, but I don't think that can continue. I think that's just really a mass exodus of folks moving out of these urban core locations that have been literally locked up in their homes for 5 or 6 months.
Yeah. We're going to take a break. This is Jordan Goodman of The Money Answer Show. My guest this hour is Kevin Bupp. He is the founder and CEO of Sunrise Capital Investors, which helps people invest in real estate. You can find out more at his website, which is mysunrisecommunity.com. We'll be back after this.
You've been listening to The Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to The Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Kevin Bupp, founder and CEO of Sunrise Capital Investors, which helps people invest in real estate. Their website is sunrisecapitalinvestors.com. Welcome back to the show, Kevin.
Thanks for having me here, Jordan.
So let's go into some specific areas that you specialize in, parking lot investments. So you'd think particularly with downtown areas with a lot fewer people commuting in, that this would be one of the worst times to get into parking lots. What is the state of investing in parking lots these days?
Yeah, the state of investing in parking lots is struggling now. So you're definitely accurate with that point, that folks are not commuting to work at present. And so the last 6 months have been quite the struggle for the parking lot sector, more on the operator side of the business. And let me specify what I mean there. It's a unique niche in that the majority of the operators of these different parking assets, whether they be surface lots or parking garages, typically are not the ones that actually manage and run the day-to-day operations. The majority of the folks that are in this industry are on the management side of things, and they're not on the ownership side of the assets themselves. And so the management companies have been struggling a great deal over these past 6 months. There's certain markets that are doing better than others. We own some parking lots in some secondary downtown markets that are already at a 55 to 60% recovery of what they were same time last year. And so, with the bad also comes the good. And so one of the big benefits I think will be on the buying side, with the distress that ultimately will be as a fallout from parking lot operators that have debt loads on their properties, that have not been receiving the income that they might have underwritten or drawn out in their pro forma here over the last 6 months. And I think a lot of the markets that are in a little bit more, some more of the liberal states that are going to take longer to recover. So talking to New York City, talking to downtown Chicago, I think it's going to be a longer run of recovery for those, and therefore I think there will be opportunities that will come about of it. But in any sense, our structure with our management companies, how we typically work on the assets that we own, is there's a long-term lease put in place, typically a double or a triple net lease that's put in place. And so there's a guarantee. There's a guarantee in place. And so we personally have not seen any dip in our income. However, we do know that the management companies that are managing some of our assets, they're having some tough times in the markets. And so, but however, we have not had to renegotiate any terms.
Tell us about parking. What is the minimum investment? What kind of rates of return can people expect? What's the holding period? Just tell us about the basics of parking lot investments.
Yeah, and it's all across the board. But generally speaking, these are covered land plays for us. These aren't going to be huge double-digit returns, especially if you're buying in prime locations. But us as an investment group, we're seeking to receive anywhere between an 8 to 10% cash-on-cash return on our properties. And the typical lease term on any asset that we buy is going to be on the low end of 5 years and the long end 10 years, fixed rate term. As far as the average investment amount, we bought lots as small as $750,000, and there's parking assets that run into hundreds of millions of dollars. So it's just really all across the board.
Okay. So are you saying you would recommend investing in parking lot now, or should you wait until there's more fallout and you can buy these distressed parking lots and invest later?
Yeah, no, I think that it goes back to my original statement of, there's good opportunity in any market cycle, right? It depends. It doesn't matter if you're at the top of the cycle, bottom of the cycle. We're closing on a parking lot here in a couple of weeks that we've been kind of kicking the can for the past couple of months. We feel comfortable with the recovery in the market that it's in, based on the price we're paying, and on the lease that we structured with the operator, who's still willing to sign a lease, even given the slightly downturn in the market. We're going to be receiving about a 9.5% unlevered return on this asset. So if you ask me whether or not it makes sense for us to buy that particular property, I would say yes. If that same property, if I was only going to be receiving a 5% unlevered return, I'd probably debate a little bit and hold off and see how things play out here over the coming year or two. So
are you buying
I think
individual?
There's opportunity in any market.
Yeah. Are you buying individual parking lots, or do you have a fund that has several parking lots around the country in one vehicle?
So we have a combined fund that actually owns mobile home parks and parking lots. So it is a fund structure, but it's got both asset classes rolled up into one fund.
Very good. Okay, the next area is mobile home parks, an area you've been in for a long time. I think you did a book about mobile home parks, as I remember. Is that right?
I've done a book and a training course and have a podcast even on the topic, so yes.
So what is the appeal of investing in mobile home parks in this current environment? You'd think the people in mobile home parks would be the most affected by both COVID and losing their jobs. And as you said, that people were getting stimulus checks, but that hasn't happened since the end of July, and here we are at the end of September. Yeah. So you'd think those people would be the most distressed, and that would be difficult for mobile home parks in the current environment. Yeah.
No, that's a fair point. However, I will say that the majority of folks that live in a mobile home community, they actually own their home. And for the most part, it's normally going to be the most valuable asset that they have, just like any other human that owns a home. And the average lot rent across the country, is right in the $350 a month range. And you could pick any city where we own an asset. We own in 13 states today. And our mobile home park would probably fall in line with the quality of like a B-class apartment complex, somewhere in that B-minus range. And so just middle of the road, blue-collar, quality, affordable housing. And there will be no cheaper place that you will find where a family of four can live and raise their family than that of a mobile home park. And so with that being said, that $350 a month, if they can't figure out a way to make that payment, they're not only at risk of getting evicted, but they're also at risk of actually losing that home. And I've come to find that, when backed against the wall, almost anyone can figure out how to come up with $350 in a given month. Number one, to stay in their home. Number two, to know that they're not running the risk of actually losing that home, have it being taken away from them. And so I think that's one of the big reasons why, mobile home parks have remained so strong, not just through this pandemic, but also they were the top performer during the 2008 financial crisis as well. They were the top performing asset as far as collections and lowest number of default rates of any other commercial asset class. And I think that's the reason. It's the cheapest place to possibly live. If you can't afford to live in a mobile home park, there's literally no other option at that point in time. I mean, you'd be basically homeless under a bridge.
Yeah. So, again, your funds, it's a diversified portfolio of mobile home parks, or it's one at a time? How do your funds work, and what's the minimum to invest in them?
Yeah, so we have multiple funds. We're currently, we just rolled out our third fund, which will be a combined parking lot and mobile home park. The minimum investment is $100,000. They own multiple assets underneath each fund. Each of the funds in the past have been very different than the next in that, one fund might own 7 assets in 3 states, and we've got another fund that owns 16 assets or across 7 different states. So this fund that we're rolling out, that we just rolled out, will be a combined of mobile home parks and parking lots. Basically, the northeastern, southeastern, and select Midwest regions is where we invest.
And this is for accredited investors, or anybody can invest?
That's correct. It's a Reg D 506C, so they have to be accredited. Mm-hmm.
Uh-huh. Very good. And what is the appreciation opportunity in the long term? Do you eventually sell the mobile home parks, or do you plan on keeping them forever?
Yeah, I'd like to say that we're a buy and hold type investor. They're not building any new mobile home parks. It is the only asset class that has a diminishing supply. So there's more that get redeveloped or shut down in any given year than new product that comes online. And so we're of the mind that if we find a great mobile home park in a phenomenal market that has a high demand for affordable housing, that we would like to keep it long term. I mean, we're long term investors. We're 7 to 10 year plus horizon. Now, with that being said, we've sold a number of communities over the last couple of years. As we build our business and grow, we evolve our portfolio, and we've selectively chosen some of the assets that maybe we no longer want to hold for the long term. Maybe it's the market. Maybe we didn't grow as much in that market as what we had originally intended. Maybe it's just a smaller asset, and it could be many other reasons. And so, for the most part, we're buy and hold type investors.
Very good. We're going to take another break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Kevin Bupp. He is the founder and CEO of Sunrise Capital Investors. Helps people invest. We've talked about mobile home parks, parking lots, also apartments, office buildings, single-family homes all across America. You can find out more at his website, sunrisecapitalinvestors.com. We'll be back after this.
You've been listening to The Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to The Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Kevin Bupp, the founder and CEO of Sunrise Capital Investors, which helps people invest in mobile home parks, parking lots, apartments, office buildings, single-family homes all across America. He also is the podcaster at a podcast called the Real Estate Investing for Cash Flow podcast. You can find out more at his website, which is sunrisecapitalinvestors.com. Welcome back to the show, Kevin.
Thanks for having me, Jordan.
Tell people again the name of the fund we were just talking about, and is it open for a particular period of time? Are there commissions? Just tell people again more of the details of how they can get into that fund if they'd like to.
Yeah, no, absolutely. And to learn more about this particular fund and our offering and any future offerings, our website is the best place to go, sunrisecapitalinvestors.com, as you mentioned. And this particular fund is called the Mobile Home Park Growth and Income Fund number 3. So this will be our third fund here over the past 5 or so years. And again, they can download the prospectus, the offering memorandum, get all the details on that particular offering itself from the website. As far as the length of time that it's open, we have the ability to raise capital here over the next 18 months and the ability to extend it thereafter for another 6 months. And so the general horizon will be somewhere in the 2-year range, depending on the activity within the fund.
Yeah, very good. Another big topic is the whole eviction and foreclosure moratorium going on in the country. Now, that was part of the CARES Act, which expired at the end of July. There have been some other ones that are not totally clear. So let's first talk about the rental situation. What do you see happening with evictions? I mean, landlords have been hanging out for a long time, in many cases not collecting full or even partial rent, and they're kind of getting at the end of their ropes and want to evict people. What is happening there, and what do you expect to happen from renters who are not paying all or part of their rent?
Yeah, it's a great question. I think that I would have had a slightly different answer a couple weeks ago prior to the CDC kind of stepping in and rolling out this nationwide eviction moratorium, because prior to that, it was really on a state-by-state, municipality-by-municipality basis, unless the loan was backed by the government entity, right? But other than that, there was multiple other states that they had opened evictions back up. Landlords were able to file, and then the CDC stepped out 2 weeks ago, and I think it's being contested by multiple different outfits, and so we'll see how that all plays out. But Jordan, I personally feel that I think that there's some delayed pain that landlords are going to feel. As we mentioned at the beginning of the show, residential real estate, rental real estate it's been doing phenomenal, given the time that we find ourselves in during a pandemic. Unemployment rates reached double digits, what have you. And I only think that it's been doing phenomenal. I can only define as phenomenal because I do feel that the number of folks that actually were unemployed, they were still receiving enough money from the stimulus checks that were being received up until July 25th to actually make their rent payment. It's been now, it's been over a month since they received that last stimulus payment. I think that we're probably going to see, unless another phase 2 comes out, which I think they're still trying to work through, I think we'll see an uptick. I really do. I'm not sure exactly how it's going to play out in the long term, and a lot will have to be said once the election comes and passes, exactly where we stand and how the world looks at that point in time. But I do think, assuming that at some point the stimulus money does run out for good, there's no phase 3 after phase 2. It runs out for good. I still think we can all agree that we're probably going to find ourselves in an unemployment rate that was higher than that prior to the pandemic. I think we can all agree on that. Whether it be 7%, 9%, it's going to be higher, inevitably. And I think once that additional money starts flowing in, I think that's when renters are going to feel the pain. I think that's when it really will trickle up to landlords, of renters really not being able to pay their monthly rent. Now, as far as the eviction moratorium is concerned, I think there's certain states that are acting on that kind of added benefit for renter protection more than others. We own some communities up in New York, and what we personally have seen is that, there's a little bit more of a selective action of whether or not we should pay our rent, even if they can pay the rent. And it's a very different state of affairs in communities that we might own in Texas or Kentucky or Alabama, what have you. It's just a slightly different mentality.
What are you doing, Kevin? Since you're a large landlord, what are you doing to people who have not paid their rent for 3 or 4 months and they say they don't have the money to pay anything? How are you approaching that?
Yeah, that's a great question. We rolled out a COVID hotline in the middle of March in preparation for April. We hired a dedicated staff member, set up a dedicated hotline, over-communicate with our residents, letting them know that ultimately we want to work through this together. Our intent is not to ever evict anyone out of their home. If someone lost the ability to pay their rent, we're here to work with you, work through a payment program, and just an open line of communication is what we sought to establish, and we did that with the majority of the residents that truly had a challenge with paying. And as far as what we did to prove their inability to pay, we didn't make it overly egregious. It was simply, tell us what happened and tell us when you might be able to resume making payments again. And it was simple as that. Again, our goal is not to evict someone out of their home if they ultimately want to stay there and have every intent of staying and paying their rent at some point in the future. And so we've worked with everyone that we possibly could. There's always going to be those random bad apples here and there, but for the most part, everyone's done the right thing, communicated with us, and we worked out a long-term payment program for them.
What happens if somebody is unemployed, does not particularly have great prospects of being employed anytime soon, and just says, I can't pay right now, I don't know when I'm going to be able to pay? What do you do with a situation like that?
There's unfortunately, I think that's the same situation that most landlords in across the country that run into that type of tenant. There's not an option today. And every state and every judge they're seeming to interpret the CDC national moratorium eviction differently than the next. For example, in Georgia, I've seen that a number of the counties in Georgia are still continuing with evictions. Judges are still pushing forward with evictions if there's grounds for it. And then, in other states, they're following the CDC orders and they put a halt completely on any evictions. And so, to answer your question more straightforward, if we have the ability to move forward the eviction process, if the tenant has just blatantly said, we're not paying you, I've got the ability, I'm just not paying you, I'm going to stay here whether you like it or not, we'll go through with the legal process if we can in that given state.
Yeah. And then on the other side, on the mortgage side, go ahead.
Yeah. No, I was going to follow it up by saying, but our intent is not to evict residents. Our intent is to keep them there. It's in everyone's best interest for us to allow them to, keep a roof over their head, to keep a safe and dry place for their family. And even from a financial sense for us, it makes more sense for us to keep them there than for us to forcefully evict them. However, there comes a point in time where it no longer makes financial sense on either side, and we've got to figure out a legal way to remove them.
What's going to happen to landlords who are not been getting their rent for several months? Are they going to have financial trouble as well?
Yeah, that's a great question. The majority of landlords in this country, which I think is it's a very different picture than what the general public has of landlords. I think the general public that has never owned rental real estate views a landlord as a rich, wealthy individual. And for the most part, that's just not the case. For the most part, it's a mom and pop landlord that owns a few rental properties. They've made some smart decisions 15, 20 years ago for long-term retirement. going to use that property as an income source once they were retired or what have you. And they don't have a lot of reserves. A lot of them are still working other jobs. It's not their full-time job. It's a side investment. It's something that they rely on that rental income to pay their mortgage payment, to pay their debt payment, which most of the time is going to be a 30-year loan. And I think there's a lot of landlords that are going to be already in a very peculiar situation that, unfortunately, there's no relief for us or any of those other landlords out there. There's no government relief that has come our way, for the lack of rental payments that have come in due to the pandemic and unemployment and eviction moratorium, what have you. So I think it's going to be. I think it's already a tough road, Jordan. I think there's already a lot of landlords that are struggling. I follow different landlord boards on Facebook, different forums, investment group forums, what have you, and they're struggling. I mean, how can they not be?
So are they going to be going bankrupt and putting their apartment houses up for sale at discounted prices?
Yeah, I think it depends on what kind of loan they have as well. If they have a Fannie Mae or Freddie Mac loan, they've been very lenient with offering forbearance programs, and so I think that those that have the government-backed loans will have a little bit more leniency and be able to work through these challenging times until things get back to somewhat of a normal. I think if they have a loan with a local bank, a bank that they can actually speak with a loan originator, what have you, I think again there's a lot of flexibility there. But I think where the trouble really comes in when you start speaking to not necessarily just a single-family rental, but an apartment complex. I think where the trouble comes in is when they have a CMBS type of loan structure in place. Very challenging to restructure those types of loans. And I think those are the landlords that will ultimately see the pain sooner than the others. Because most banks, they can't afford to take these properties back like in a one fell swoop. I mean, like this, it would be an inordinate amount of foreclosures if all the banks kind of threw their hands up in the air and said, "No, I'm sorry, we're going to move forward with the foreclosure process." So, in any event, I think that's where the biggest pain is going to be felt there in the CMBS world.
And then, how about on the individual side? A lot of people are not able to make either full or partial mortgage payments. Are you going to see a lot more foreclosure? There was a foreclosure moratorium as part of the CARES Act. It's now kind of a spotty situation. What do you expect to happen with individual residents not being able to make their mortgage payments?
Yeah, I think it's inevitable, right? I mean, it's basically, I think it comes down to common sense logic is I can't make my payment. My bank is forcing me to make my payment. What's the alternative? And if there is not an alternative, in the form of some type of stimulus or some type of third-party assistance, then I think that there's going to be an uptick of foreclosures. But I personally feel there will be a phase 2 stimulus here rolled out that will ultimately help the general public, the renters, what have you. I think that there will probably be another form of a PPP type loan program that gets rolled out at some point in time. I think that the government's going to do anything they can in their power to prop this country up for as long as they possibly can so that it doesn't completely implode. And I think that's what we're teetering on right now. I think we're teetering on a cliff from many different perspectives that essentially sooner or later it's going to fall over, but things will be kept propped up for as long as possible.
And what will happen to the mortgage-backed securities market? People are owning Fannie Mae, Freddie Mac, Ginnie Mae securities. Are there going to be massive losses on those and people will lose them? I mean, could this be similar to 2008, 2009 in the mortgage-backed securities market?
Yeah, I mean, there's already just shy of $100 billion of CMBS defaults as of a week ago. And so that is a substantial number, and it's only going to grow from there. And I think there will be. I don't know what it will look like in comparison to 2008, 2009, but I don't think there's any way. I'll leave it. I'll put it this way. I don't think there's any way, Jordan, that we could ultimately walk through this unscathed. For those that think that Trump gets elected, Biden, whoever gets elected, doesn't matter. For those that think that we're going to put a new president in place or keep the existing president and the economy just gets back to normal, or we get rid of these mask mandates and these COVID restrictions and the world just gets back to a normal place, I think that's nearly impossible to think that would happen. Do you agree?
I do agree. I agree. We have to go to another break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Kevin Bupp, founder and CEO of Sunrise Capital Investors, which invests in the real estate market. You can find out more at his website, sunrisecapitalinvestors.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour, Kevin Bupp, is founder and CEO of Sunrise Capital Investors, which helps people invest particularly in mobile home parks and parking lots and other forms of real estate. You can find out more at his website, sunrisecapitalinvestors.com. Welcome back to the show, Kevin.
Thanks for having me, Jordan.
So tell me about the future of cities. We've, for many years, been urbanizing. People have been moving into the cities. Now that seems to be reversing. If you were mayor of New York City or San Francisco or Chicago, what would you do to improve the future outlook for your city?
Yeah, that's a tough question to answer. Being put in the shoes of Como or what have you. It's just, I think I'll answer it this way as far as what's the long-term outlook for cities. Again, I mentioned at the beginning of the show that us humans have a very short memory span. We just do. Once things get back to some type of normalcy, we'll have a hard time. It'll be a very foggy memory in 5 years, and it will be a very, very distant foggy memory in 10 years of the pandemic for the majority. For the majority of the population. For those that maybe have lost a loved one, very different situation, but just generally speaking. And I think that, folks live in these urban environments, New York City, Manhattan, whatever. They live in these urban environments, for the energy, for the dining, for the entertainment, for the culture. Right now, all that is gone.
Right.
I mean, it doesn't exist. It's practically non-existent. And I think that in a matter of time, whatever that time looks like for each one of these major cities, things will open back up. Maybe not everything will open back up because some are going to be out of business for good. But they've all these cities have gone through downturns historically. I mean, there's been points in time throughout the decades, throughout the century that they've gone through challenges. I mean, look at New York City back in the '80s, right? It was a disaster, and it rebuilt itself. It became just a thriving place that people wanted to be. Murder rate went down, what have you, and it attracted folks in. And right now that people are leaving, like they're moving out of the city, whether it be permanent or temporary. I still think those that are attracted to living in that type of environment will ultimately, whenever they internally feel that's safe, they're safe again to do that. I think they'll be drawn back to the city. I don't think that the city will just become a barren wasteland, whether it be New York, Chicago, or any other major city in the U.S.
How do you decide, Kevin?
Back to when? Go ahead.
I was going to say, how do you decide, we're looking at a distressed investment, whether it's temporarily down and a great chance to buy it as a bargain, or when it's going to be like permanently down and you don't want to get into it, as it relates to real estate in big cities, for example?
Yeah, I mean, for us, it's all driven on returns. I mean, we're not speculators, Jordan, so we are not I wouldn't label us as an opportunistic investor that is going to go in and bet on the future of that turnaround. Assume that we're going to buy an asset in New York City and that the market's we're going to buy an asset in the corner that used to be a restaurant that went out of business. The entire street's been boarded up. I'm not going to buy that because I don't have a crystal ball. It's really hard to say when restaurants are going to come back, when people are going to move back into the city. I would not be that type of investor. However, with housing, it's very different. Housing, I know that everyone needs a roof over their head. So it's a very different dynamic of when trying to underwrite a residential piece of real estate than that of a retail corner or an office building or something along those lines. But even then, just from a higher level perspective, I know exactly what type of returns that we're seeking and our investors are seeking. And so it's very easy to back into those numbers. Again, not being an opportunistic investor that's going to speculate and buy something with a chance that it might turn around in 3 or 4 years. That's not our game. Our game is to buy something that we can back in today. We know that the demand is already there. Maybe it's distressed because of the ownership structure. Maybe it's distressed because of the debt structure had in place. But the real demand for the product itself, you use mobile home parks as an example. I run a test ad, and we get 100 phone calls for people that want to buy a mobile home in our community. That's real demand today. although the property might be underperforming, I know I can fix it. I know the demand already exists, so I don't have to rub the crystal ball to guess when it might come back. And so that's the type of investor we are. And I can easily back into those returns of where we need to be in order to make sense of the buy today, and then realistically run out a pro forma based on the current demand that we're seeing in that marketplace. So, again, I don't know if I answered your question. I'm not trying to beat on the bush, but we're not that type of opportunistic investor.
Looking around the country, what are some markets that you think look attractive at current prices, and which ones do you think are overpriced? Just generally as far as regions.
Yeah, as far as a region, I mean, we love the Southeast. I mean, I think it was even, it was much of a trend even before the pandemic hit. I mean, folks are getting older and colder, and they're looking to move to the Southeast, the Sun Belt. And that trend had been happening for many, many years prior to even this pandemic, and I think that it accelerated that trend here over the last 6 months or so. But we've got assets in the Northeast, we've got assets in the Midwest, and we've got assets in the Southeast. And I would say that our Southeastern assets continually outperform the assets that we have in the Midwest and the Northeast. The Midwest is very much a linear market. It doesn't go up, doesn't go down. So it's very steady and rolls forward at an even pace. The Southeast has continued a growth pattern for multiple decades now. So, and I can, we intend on that growth pattern to continue here in the future. And again, lots of folks had already been moving away from the colder states. And again, if we had to place bets on regions to put all of our, to put a majority of our capital into, it's the Southeast, and that's what we're doing.
Yeah. Let's talk about the office sector again. As you say, a lot of people are not returning back to offices. You said some offices may even be converted into housing. Is this a distressed area that you would invest in, assuming it's going to come back, or is it going to be permanently depressed?
We might consider an investment if it was a conversion, if we were going to actually convert an office building into an apartment complex. But, office isn't really our space. As far as folks, the office sector coming back, I mean, I think the long-term outlook will be different on office than what it was prior to the pandemic. Whether, companies go completely back to work or they stay completely virtual or they find that hybrid mix, there's folks that are in the office sector. I've interviewed a guy a few weeks back that, his take on it was, yes, Kevin, maybe companies will realize they don't need the same square footage that they once had. However, they'll have to actually have more of a square footage footprint per employee. And so while they might only have, 50% of the employees that are back in the office and the other 50% work from home, they might need double the actual space, right? The actual workspaces might need to be bigger with shields and what have you. And so that was kind of his perspective, that more than likely, even if we have to reduce the amount of space needed, they're going to need more for half the employees. And so that's an interesting perspective. I'm not sure if I agree with that or not, but I think there's enough technology out there that allows us to effectively communicate with our team members and feel like we're together. We're on a team. We can see each other's faces. We've got Zoom. We've got messaging programs like Slack, for example. Jordan, we had an office lease that was coming up for renewal at the end of March. In January, we decided as a company that we weren't going to renew it, and the reason was that we would come to the office every day, and we use Slack internally. And we found certain days where we literally wouldn't even see each other. I mean, with our entire team, we might walk past the office door, but we would communicate all day long via Slack and be in the same building, but not necessarily have a physical form of communication going. And we realized that it wasn't necessary for us to have that physical office space, and we decided not to renew the lease. It worked out in our favor. As COVID hit, and we wouldn't be working out that space today anyway. So I think a lot of companies are going to realize that here moving into the future, that they can be just as efficient working remotely.
So we have about 2 minutes to go. Why don't you just kind of sum up the opportunity you see in real estate with the market having been changed so dramatically by the virus?
Yeah, no, again, I think it goes back to, for folks that are listening, if you're looking to make an investment, I think you have to get in tune with exactly what types of returns that you're seeking. I think that the pandemic will kick out some opportunities on the back end of it. I wouldn't necessarily be sitting by the sidelines thinking that there's going to be a massive crash like that of 2008 and the market's going to get flooded with foreclosures. Might that happen? It could. Might it not? Right. It might not happen. It might not be that severe. I'd say that there's opportunities today. If you look hard enough, you might just have to dig a little deeper. and just know exactly where you need to be as far as your returns. Get comfortable with the market that you're investing in, and be comfortable making that investment today. If you can back into those numbers and know that you can achieve them comfortably. So, we haven't stopped buying, we haven't stopped investing. I would say that things have slowed down, not necessarily because we wanted to slow down. It's just the world slowed down a little bit, and so we tread a little bit more cautiously for the first couple months of the pandemic, and then quickly realized that the world still moves on, and there's still investments to be had, and we know exactly where we need to be as far as returns, and we're comfortable buying certain assets.
Very good. Well, thanks so much. My guest this hour has been Kevin Bupp, founder and CEO of Sunrise Capital Investors. The fund he was talking about that invests in mobile home parks and parking lots is called Mobile Home Park Growth and Income Fund 3. You can find out more about him at sunrisecapitalinvestors.com. Thanks so much. I think people learned a lot during this last hour, Kevin.
Thank you, Jordan, for having me. It's been great fun.
Thanks again, and we'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.